Oh, okay, so you're welcome. It's been a very long time. I did a video, so uh, let's enjoy this one. So it's a new month, August, and today is the 8th, right? So once the month has begun, a new month has begun, it's appropriate for you to check your monthly time frame to know what to do. Okay, so it's more of a top-down analysis, if you like. So, like always, you are going to do some few assets, top-down analysis to know my thought patterns and what I think about the direction in which market is likely to move so that we can follow for entries. All right. So let's go straight to trading view. And I'm certain that you are very much aware of the fact that now synthetic indices or derivative volatility indices is available on TradingView. And it's a plus because previously, when you use your browser to access the Deriv website, um, of course, you have access to the charts, but the time frames were limited. It was only up to the daily, right? But here on TradingView, you can have the monthly time frame, the weekly time frame, or on the chart for proper analysis. Okay, so all right, so we are starting with volatility 75, and this is the monthly time frame here. We know that price has been very bearish for a very long time. Price has been very bearish for a very long time, trading from the top to the bottom here. And this actually has been price movement, right? From the top here, a little drop. We pulled back a bit, a drop, a little pullback, and more drop, and we seem to be out pulling back again. All right, so let me zoom in for us to see the chart very well. Uh, we are going to concentrate on this part of the price action. Okay, so now, that's it. So now, this is an area of support that has been broken. All right, an area of support that has been broken. So for a simple break and retest trade, once support is broken, we are expecting that it will be retested. Yes, as resistance for a sell continuation. All right. So that can be anticipated. But then you can see that price also created another support here, which it has failed to break. It rather respected it. So we are coming from a double bottom. Okay. A double bottom here. We have our first leg and our second leg. So we have something like this. Down, up, down, like a W. Okay, like a W. Let me push it aside. So we can see that the neckline has been broken. This is the neckline. This is the neckline. And we can see that here, which has been broken strongly with that bullish candle here. We had that strong breakout. We had that strong breakout. Okay. Now, something very interesting is happening. Those of you that know CRT, when we consider these three candles, I can tell you that there is a CRT formation. Whether it is going to play out or not depends on time. Okay. Now, this will be our candle range low. We are using this candle, which is March, the month of June. All right. This was the month of June. This was the month of July. And this is the month of August. Now, we mark the low of that candle as our candle range low, right? CRT low or candle range low, if you like. And then we mark the high as our candle range high. Of course, I'm not teaching CRT, but if you know about it, it's going to be very useful even in this analysis. So that is it. We have the high and the low, and we had this candle going above that high, our candle range high, and closing back within the range. So the next candle opens and decides to trade up. All right. So price is actually mitigating this week, maybe mitigating this week. So of course we may expect a sell, or price can violate this area without the CRT playing out. Okay, but that is not how we are going to think. Given the fact that price is bearish, but we are coming from a double bottom, it means that we are still bullish. All right. So um if you are going to look for a CRT entry, we are not teaching entries, then we are going to go down to our one lower time frame, or one time frame lower than the monthly. Then we are going to see how we are going to manage to get our entries there, our entry there. Of course, like I said, I'm not teaching entry from the weekly. Let me go to daily and see. Okay, so from the daily, this is our candle range high. Okay, and we have this price action on top of that candle high. So this is the wick that we saw. And then this is the body that we are seeing. Okay, so we can see that this there was a sweep of liquidity on top of this, and then we had markets breaking below this for a change of character. Okay, a change of character or market structure shift. Is it? So shift, a market structure shift here. So it's an indication of a bearish move. All right. Now we are going to mark our order block, which is this last bullish candle here. You can mark up to the wick, but the body is also fine. So this is going to be our supply zone, which we are going to expect market to sell from. Once price gets in there, you could see that it attempted to get there, but we couldn't quite reach. And then we had that candle selling off. That was yesterday's candle. And today, market is pushing to the upside. So I would rather want to see market push right back into this range. Then you switch to the lower time frame to look for a sell to the downside. All right. And of course, per our trading rules or CRT, one of the rules is that you can target 50% of the candles range. All right. So this is our range low and our range high. You use your fib to mark from the low to the high. Then of course the 50 0.5 area, which is here, is going to be your target. This is for an easy target. So mostly price will hit this target before if it will reverse. It reverse. Of course, I expect it to reverse anyway because I expect volatility 75 to buy up the more. Okay, buy up the more. So I'm going to show you why I said I expect it to um buy up more. I hold a bullish bias. And for that matter, even though we have a CRT being created inside of a bearish fair value gap here, we still have a bullish fair value gap at the bottom here, which has not been mitigated. Yes. So I would expect that even if you are going to sell this candle, once price touches this zone, it is going to reverse to the upside. So if we get a massive sell, then that is where we are going to exit, right at the bottom of this candle low, the doji candle. That is where we are going to exit. Because as soon as price touches there, you see that there will be a reaction, and you might think that price is what just retracing, but per experience, if your bias is wrong, your CRT may not play out for that long. So I hold a bullish bias, even though we are getting a bearish setup on phase 75. Okay. Yeah, so I just switched to the 4-hour time frame, and this is the daily order block that we marked. Now, if you want to refine, we could refine to this last candle here. This last candle here. All right. This last bullish candle here. But then you could also use 50% of, you see these consecutive up close candles before the down move that gave us this break of structure down here, or a market structure shift. Internal. We could use 50% of that range. Let me delete. So you mark from the low, if you like, use the body to the body, upper body, from the lower body to the upper body. And then 50% is going to be the 0.5 area, which is here. That is where you are going to time your entry. All right. You can use that for your entry. Or you can decide to let markets trade right back into this order block here. Order block here. So that is what I think about VIX 75. VIX 75. Of course, we are getting a rejection, and we are getting what? A reversal pattern form here. So ideally, if you are watching now, this is not a financial advice, all right? You are taking this on your own peril, at your own peril. If this candle, current candle, decides to retest the support here, you can buy from here. Your stop loss at this candle's low, and then your targets can go that high, even up to where we are expecting markets to start selling from. This can be your target, the 0.5 level of the order block. So you can mark this down and watch how it plays out. Okay. Of course, you must know why price is rejecting from this level. For our daily time frame. Okay, so I'm not seeing anything except for this inversion fair value gap, IFVG. So price seems to be finding support here at this inversion gap. If you don't know about inversion gap, forget about it. This was a fair value gap, bearish, which was supposed to act as resistance, but this candle went through that. Then it acted as support. As we decide to trade down, price closed the body right above that fair value gap. And then this candle came and respected the same area. And the next candle opened, traded down, and seems to be respecting the area as well. So that is very likely to happen on VIX 75. VIX 75. All right, so that is that for VIX 75. You might return to it to see how that trade is going, but let me see another one, another asset, which is 75 1S. I'm just checking some of my favorite pairs, that's all. And we are on the monthly time frame for 75 1S. You can see that market rejected from this level of support. If you don't know why this is an area of support, forget about it. But for those who know, kudos. If you know about Malaysian support and resistance, then you understand why I mark this area of support. But for our traditional, well popular support and resistance, you can also draw it like this. That is an area where price has had multiple rejections whilst it was trading down. And there is a reversal to the upside. So this is an area of what? Support, which price found. And then we have shifted structure by breaking above this high that was here. So last month, which was July, price traded straight up above that candle high. So we have a change of character right here. So price is all bullish. Now, even though we are bullish, the reason I'm going to be a bit careful is this maybe price may give us a trading range, all right, from that candle high and this candle low. So once market is trading above a previous month's candle high, we need to watch out for any kind of reversals because sometimes price can just liquidate that high and then start trading to the downside. Okay, so though we are going to follow the bullishness, but we are going to be very careful. As soon as we notice any change on the medium time frame, like the daily or the weekly, especially the daily or the 4 hour, any um, change of direction to the downside may signal that price may be trading to the downside. But until then, we are holding our bullish bias for now. So price has been buying, market has been buying. Okay. Those who know trend line can put a trend line here. You can see that price is trading away from the trend line. So maybe it might return back into the trend line before pushing up on the daily time frame. Let me check. Okay, so if you want to really refine that, I think you can have something like this. Good. Where we have multiple touches on the trend line. Okay. Uh, Notice how price is struggling to push up, even though we are bullish. On the daily time frame, we have entered the consolidation for a number of days now. Price is not going up after breaking up above the previous month's high. This is the previous month's high that we marked. This was the previous month's high. Wow, that was too wide. Oh, okay, so I use the horizontal line. Yeah, so I'm trying to change the horizontal line and delete the trend line and use this one. So we created a range and we are trading above that range high. Good. Now for some days, like I said, price is consolidating around here. It's not moving up, neither is it moving down. It has stayed in one area for a long time after creating this area of what? Resistance. So price is failing to break through that resistance. Okay, so we are going to be very careful and follow this price action. It's 2 eyes or 4 eyes. Okay, let me check the 4 hour. Okay, so the 4 hour, you can see that the 4 hour, there has been a change in direction. We created a 4 hour support here, which was broken. Okay, and price is retesting that area and is throwing some wicks to the upside. So I'll not be surprised to see markets start dropping from there, dropping from there to the downside. I'll not be surprised. I'm not saying take this trade, but if you want to take it, it's not a financial advice. So I'll not be surprised to see price dropping from there. Yes. And this is like an M shape, those who do pattern trading with a broken what neckline and price came back to retest. So selling from there is not a bad idea at all. But you have to go for maybe 1:3 risk to reward. All right, risk to reward. So I think that is all for this particular asset. Though we are bullish, we have to watch out for some more bearishness because price has traded up for quite some time. I've been buying for quite some time. We've not had any deep retracements. So maybe this is the time you are going to see some deep retracement. You have that bullish continuation. So let me move to 25-1S. 25-1S on the monthly time frame, we are bullish. Yes or no? Do you agree or you disagree? Type it in the comment section. Okay, so maybe this will be our last asset. You check the others later on. So be checking my YouTube channel for the next video. Yeah. So price is rejecting from this level of resistance on the monthly time frame. And we have also created a level of support here, which price has not broken yet. So we are kind of stuck in a range. Stuck in a range. Yes. So we don't know whether we are going to break down or track. It's just going to go upside. We are not aware. So you need some more price action to see. But we have been bullish, if you can see from the bottom here. Market has not been buying. Market has been buying, making the higher highs and higher lows. Higher highs and higher lows. Of course, we had some deep retracements. Then we had a push. And the candles here are not healthy. When I say they are not healthy, um, it has a small body and longer wicks, especially 1, 2, 3, 4 for the past month. You can see that candles here are not healthy. So market is not pushing up, neither is it pushing down. And I'm not surprised because we have a fair value gap here. So maybe price is what? Rebalancing this fair value gap before it decides what to do next. That's why it has spent a lot of time at that spot. So if you don't want to be cooked, you can stay away from this asset for now, or you can go to a very lower time frame. We are on the daily, and we can see that inside of that fair value gap, the daily is what? In a range. It's in a range. So avoid ranging markets if you can. Can see that range created there. So market will have to decide what to do, whether it will leave the range to the upside or to the downside. So we keep watching. All right. So just stay calm. Don't rush. Don't rush at all. Even on 1 hour within the range, you can see some trend. A low, a high, lower low. Swap liquidity, change direction, a little pullback, and market bought. So perhaps I don't know whether market is going to use this as what? An inducement area. Let me remove the range. Because we have a sweep here. If you know that entry model, you can apply sweep, a break to the upside. We had a pullback here as what? Our liquidity. And we can use this QMR Quasimodo area for our buy entries. This is going to be our protected low. So this setup, it's not a bad idea. The stop loss a little below here. And can go for that high, for that target here, or even these highs. So this is a very, very sweet, nice setup that I'm seeing on 25 1s. So you can watch it. When price comes to that zone, you see if you get confirmation, then you buy. So I think I'll end on this one. Thank you so much. This has been easy for us. Like and subscribe.